All right, so we're gonna do a little trade review session here for October 11th. I want to start off with, we'll start off with TPO, okay? I'll collapse this. This was today's TPO. So what we were looking at on TPO is we didn't have anything very clean. We opened up within yesterday's, sorry, let me get a different color, within yesterday's balance range, right? So this is value for yesterday, these really white prints. Value area low, value area high. This was our open price for today, so we opened inside of value. In the on session actually, and even into the open, we actually did drive a little bit through the highs and we swept some highs here on ES. The problem was, and you'll see going into the charts, is on the 1 minute chart, we had exactly equal highs. And I'm actually gonna show you guys on the chart. Today was a funky day for this reason. Every drive to the downside I noticed made equal highs or very close to equal highs, drove through. Any drive to the upside made equal highs as well. And these things scare me away from price because they're market anomalies or market inefficiencies that the market wants to correct, right? The market doesn't want to leave equal highs. This is essentially a liquidity pool up here. The market typically goes back, fills those areas, and corrects itself and gives you these types of plays or patterns. So at one point at the open, we had equal highs, equal lows, and then we were trading in here. So I was just a big question mark, didn't really know where I wanted the market to go at that point. I looked at NQ, and for the past few weeks, NQ's been a lot cleaner. I don't know why, but I got to start maybe looking into NQ, which I might do. So TPO, there wasn't much. We had a clean high, we had a clean low, we were trading inside of the balanced price range. I don't really have much on the TPO side here. We'll jump into some charts. So on our charts today, this was today's price action within this gray area. This is yesterday's price action. This is the on session here. One thing that I noted going into today's trading session was, if you look at this low right here, this was a sweep in the on session, okay? So call this accumulation, a manipulation sweep, and then a drive to the upside. And when we get stuff like this, where is the market going to drive to? It's going to drive to buy side or an inefficiency in the marketplace. In this case, it was this fair value gap that it drove to. So it drove to the fair value gap, which is the market inefficiency, okay? And from there, it actually swept the high again. I was interested in possibly shorting this, but we'll drop down to a smaller time frame and I'll show you why I didn't. Obviously, hindsight says we should have shorted this, right? Where? To the lows and these exposed inefficiencies in the marketplace here. Let me drop down to the 5 minute. So here's a little more granular view of yesterday's price action. These are the very equal lows in the marketplace going into the on session. And if we draw a little box here, I don't like drawing boxes with that. We draw a little box, something like that. We can see that we've got the manipulation move. We drive up off the manipulation move. On the 5 minute, this was decent. There was a fair value gap here. I don't play order flow in the on session, but if you bought something like this because maybe you were trading the Lundo session, buy, stop, and then look for inefficiency in the marketplace, which would be somewhere in here, or targeting these highs. Now, what I did like was this high, and this high. Every time we broke a high, the market was weak and we pulled back below this high. We couldn't close and be strong above this high, okay? Now you can even see it on the 5 minute chart, and I'll zoom in here a little bit more. You can see on the 5 minute chart, these two highs, equal highs, right? Equal highs right across here. This scared me from looking for shorts when we came back into this area because I figured the market would want to just come here, clean this high up, which it usually does, before it makes its move to the downside. Today, it didn't do that, okay? Which, I mean, it is what it is, really. Drop down into the 1 minute chart here, and you can see the same thing, right? We've got those equal highs. After we probe through these highs, probe through, fail, big fail. This would be market structure shift, displacement to the downside, okay? and there isn't anything really in here, even down on the 1 minute chart, that I would want to start trading. I would want to start looking for shorts probably below this, right? Below this area. The market was being ignorant today. I wouldn't have taken this personally. We drop down. We can never get something that returns into a premium if we're looking for shorts, okay? So if this is the high and this is the low down in this area, we need a premium short up above 44.05. We can't really find that, okay? The market just continues to trend down. We chop, chop, chop. And then what do we do down here? The exact same thing that we did, bigger picture right here. Market accumulates, manipulates, distributes, right? We zoom in here, the market does the same thing. The market accumulates, manipulates, distributes the upside. The difficult thing about this, once again, is even though we can see the market distributing to the upside, we're moving to the upside. If we marked out a potential entry of something like this, if you were playing a PD array from an ICT concept, is this playable? This is very difficult for two reasons. We go like this. We are just below the 50% range in discount, and lots of time has passed, okay? This is the buy side of the curve. Once we start tanking like this, this becomes the sell side of the curve. So we'd essentially be trying to buy the sell side of the curve. This becomes very difficult. What I would like to see in a situation like this is price drives up. As soon as this fair value gap gets made, we see something on order flow, price pulls back within 2 or 3 minutes, we get a rebalance fill, and then a drive to the upside. If you're targeting this black area, which is the 1 hour fair value gap that we had marked out from yesterday's session, I believe it was, this is legitimate. You could be targeting the highs and the trade just didn't get there, but I want these things to happen quicker. This fair value gap becomes a very difficult trade when 15, 20 minutes of time have passed. If you have a 1 minute setup, these trades need to happen a lot quicker, rebalance, and drive in the direction that you're looking for the trade to drive in. Now, other options that we could have had today or could have taken today are things like this. If we're still looking for the market to get short, drives above these highs, drives above these lows like this, that fail, we've got a drive above, and then we essentially make a balanced price range here. So drive up, drive down, aggressive, aggressive. This tells us the aggression from the buy side just got completely wiped out by sell side aggression. We could be looking for shorts. If I go through this, all of this price action here, I can't find any good shorts within this price. So what I'm getting at is today was just not a very, very good day for trading. Back to the point that I was making about the relatively equal highs and relatively equal lows. I told you guys I was going to show you guys intraday. We know we have equal highs. ES starts doing this. We move down, down, down. Now we have equal lows, right? Very equal lows here, intraday, small picture. Price drives to the upside. Call this displacement, shifting market structure. I do not want to buy this. Why? We have these relatively equal lows. This becomes a liquidity pool for everyone doing exactly this, trying to buy this. Market sets up a liquidity pool, pulls back, and takes out all of those anxious and terrible retail buyers. Here we go again on ES. Look at these lows. Even if the market starts driving up like it did, it is very difficult for me to take a long to look for upside potential because of these relatively equal lows. So all in all, ES today was a pain in the rear. Actually, it's side by side NQ and ES. So ES right here around 140, not a time I would be trading. This is NQ at 140. Much better, right? Much better. At least we get a sweep below a low. We're wicking below the lows. We can't close below. We drive up, displace higher, market structure shift. We get very small entries here. We get an entry here. These are trades that you can possibly take, okay? ES, no, because of this. And I've noticed recently ES is doing a lot of this, and it's making it extremely difficult to trade. Go back to the open, equal highs on ES, NQ, no, not equal highs. A very clean and complete high. We drive up, pull back, drive up, fail, fail. Not really any entries on NQ either, but the high is clean. And if we can, or if we could get a trade in here, we could have taken a trade. NQ puts in equal lows here. That is 10, right around here, with ES as well. Drive up off the equal lows. We can't take this trade, right? Why? We're likely coming back to these lows, especially after we fail to probe higher here 3 times. Probe higher, probe higher, probe higher, fail, drive down. This is a really tough short. I would have liked displacement lower, short in here, market goes down. So all in all, this is a difficult day to trade unless you were scalp trading. The only trade on NQ that I see that might have been worthwhile is this area right here. We get above this high. Okay, so this could be a sweep above a pivot high. Our stop is very realistic above this pivot high. Target these lows. Make 2 to 1 and change on this type of trade. And then once we hit the lows, we just completely rally back to and through the highs. Kind of ridiculous, kind of a day that we don't want to be trading anyways. If I pull up some of the footprints on ES here, we'll even go back to the open. Here's our double top on ES. These highs aren't extremely clean. There is some failed acceptance on the buy side here, but we do not have sell side imbalance, telling us that the sellers are in fact destroying this range. This is the first time that ES shows any sort of failed acceptance. We do have an incomplete auction, so still not very convincing, but the sellers do start participating. Now, when these sellers start participating, if we want to sell, where are we selling? Here and here. Price does not even reach these areas. Again, making for an extremely difficult day to trade. Now, I knew this day was kind of going to be gnarly when I saw the market open. 931, 781 contracts, 493 contracts, 318, 273. So this is a passive seller that's sitting on the offer aggressively. Like, this guy is super aggressive. Price moves down and he puts 2,073 contracts on the offer to sell as price is moving down. He did it a few more times as well. Look right here. 1718. This is a low break, a low of day break. And as soon as we break the lows, he is putting short positions or sell positions on the offer. Is he covering a long that he's possibly in from a while ago? Maybe. I'm not sure. But it's passive aggressive nonetheless. Price drops down on ES here, 1046. Let's reference this on our chart quickly. ES, 1046, right around this area. So it's this sweep of the low. Aggressive sellers through the low. This is not the best failed acceptance, but we do have buyers showing up here. If I saw this at the low, I'm far more inclined to look for a trade into this area, okay? If we saw something like this at the low, or even if this print was a little bit smaller and we could get this very clean failed acceptance with buyers come into play, what happens is price drives up. We have buyers, print opens, we pull back. Where do the buyers want to buy? The buyers want to buy at the previous buyers. So we pull back, the buyers buy, price drives up, drives up, drives up. We get pullbacks into previous buyers, drives up. It is essentially a buy until sellers start selling below sellers. Buyers here, price opens, pulls back, holds, starts driving up. We would expect them to hold here. They do not. Price goes through, sellers come in, sellers below sellers. We've got to start being wary of our buys now. This is actually a nice example to look at. Notice when we're trending up, what is happening? Buyers, buyers above buyers, above buyers, above buyers, above buyers. Sellers above sellers, above sellers, above sellers. this is the trend when we're moving up, right? The trend when we're moving down on footprints, sellers, sellers below sellers, sellers below sellers, below, below, below. Until what? We find a low. Maybe we accumulate here a little bit for another move to the downside, upside, who knows. But once we get into the trend, this is the scalp model I'm trying to build. And the scalp model is, if we get sellers here off of a completed high with sell side imbalances, sell everything back into these guys. If price doesn't come back here, we sell not into a single print, more like a bulky print. We would sell back into these guys. So print opens, we drive up, we sell these sellers, price starts moving down. And we do this until it doesn't work. And buyers come into play and start buying above buyers, and buyers do the same thing. They hold buyers and drive to the upside. This is a very nice completed high. Remember highs like this. 2 sell imbalances within the top 3 ticks, a completed auction, and failed acceptance to the upside. Are you guys understanding what failed acceptance is? What I mean by failed acceptance? I gotta know this is clear. If not, it's fine. I'm gonna explain it. We're gonna look at this high and we're gonna look at this low, okay? Imagine that this low is a high. Just flip it upside down. Actually, we'll make it easy and we'll make it 2 highs. We're gonna look at this high and we're gonna look at the high of this candle, okay? What's the difference between the two? This is, let's just assume this is a high. This is number 1. This is number 2. The difference is we have a lot of aggressive buy side pressure hitting the market button, market orders, on the offer or the ask, okay? So they're aggressively buying the offer or the ask. And they're sitting at the top of this print. This tells me there is still an auction in play. There's still an auction going on. There's people willing to buy higher. Number 2, we do not see the same thing. We do not see buyers aggressively buying the offer. They're actually failing to accept the price higher, right? I don't want to buy higher. It's not worth it anymore. They want to buy lower now. Okay, so they're failing to accept price higher. Who is taking control here? Sell side imbalance is aggressively coming into the marketplace. So this is the picture perfect completed high. Auction zeroes out. You have at least one opposite side imbalance in the top 3 prints, and you have failed acceptance. These are the highs and lows I like to see. When we get accumulation, manipulate the move. I want to see this high on the manipulation, and we start driving back down. I am willing to look for shorts in this area now. Okay, let me explain the auction theory just a little bit more for 2 minutes here. Now, we look at this high and we look at this high. We said this is incomplete. Okay, this is incomplete and this is complete. You're at a vehicle auction, okay, and the auctioneer is auctioning a vehicle off for $10,000. We're going to refer to this high here. He's auctioning a vehicle off for $10,000. Okay, I've got this 2023 Mustang over $10,000 and some guy bids. I want it for $10,000. Okay, can I get $10,500? Another guy bids $10,500. Okay, $11,000. Can I get $11,000? A guy bids $11,000. As soon as the guy says $11,000, auctioneer says sold. And you're sitting there like, what the heck are you talking about? Sold. I would have paid $11,500. I would have paid $12,000. How did you just sell it? There was no going once, going twice, nothing. You just sold the stinking thing as soon as you said $11,000. That is this auction. It's incomplete. It's incomplete because we see the willingness of, we have 112 people trying to bid this thing at $11,000. How's it sold? It's incomplete, right? So the auction needs to move up some more to try and complete the process before it turns around and reverses. Now, a completed auction with the same theory. Same Mustang is for sale for $10,000. Auctioneer says, can I get $10,000? Yep, bid. Can I get $10,500? Yep. 2 people bid at $10,500, let's say. Can I get $11,000? 1 guy bids the $11,000 price. Then the auctioneer goes going once, twice, 3 times, sold for 11,000. That's a completed auction. There are no more buyers willing to participate higher. The auction has completed. The sellers have intervened, and the price is likely to move lower. Does that make sense? This is like auction process theory, right? The market runs vertically. It doesn't move sideways. Our charts are projected sideways because it's showing us historical data, but the market runs and communicates vertically, okay? This high as well. Auction has zeroed out. There's sellers here. This high looks better than this high only because we still had some aggression up here with the 234s, but they really petered out at the high, okay? I would much rather see this 234 and this 49 switch. So it'd be 34, 49, 234. That would be that failed acceptance for me. This is not a terrible high, but just know that there are better looking ones, okay? Like this low. Lots of sellers into the low, and then they disappear at this tick value. Buyers come in and start driving price up. This would be like a C low that I probably wouldn't trade. This is like a B high that I might trade. This is like an A high that I will trade off of. Or I will look for a trade after this high works itself out. The only way I will take a trade at a high like this is if we have something like this. Back in this area, we have sellers and we have a PD array. So say we have a 5-minute fair value gap. We have sellers sitting in this area. The market drives up. It manipulates. So power of 3, accumulation, manipulation, right into a fair value gap, right into orders, and it gives me a perfect high. That's exactly how I want to see a trade. My footprint was printing different time periods today. Are you using Sierra, Lean Bean? And if so, are you using my layout? If you are, I'll definitely fix you up, man. We could definitely chat about it. Okay, so for tomorrow, what do we want to look at for tomorrow? I'm not sure that I'm trading the morning session tomorrow, but we will see. Let's go to the daily chart on ES. Almost tempted to just trade NQ. Actually, we'll go weekly. Yes and yes. Okay, perfect. We'll get you all sorted. Okay, so what I like here is we're on the weekly chart here. We've got this move to the downside. New color here. Move to the downside. Drive to the upside. We reject some weekly fair value gaps here. You see the fair value gap plotted here. We reject perfectly off the weekly fair value gap, which is great. We drive down, take buy side, drive a little bit lower. We could call this a weekly order block. Up close candles before the move down. We could call this a weekly order block. This is an area I'll be looking at on my chart, okay? I have it marked out, and that's sitting right at 44.32. We'll be looking at that area for targets if we want to continue long or possible shorts to try and reverse this thing. Drop down to the daily chart, sitting inside of a daily fair value gap as well. Right here, inefficiency in the marketplace. Here is the weekly order block sitting within the daily fair value gap. This is great. You get two of these two PD arrays lining up. Fantastic. We'll be watching that area, and I will continue to monitor this daily fair value gap. We're coming off a string of lots of green days. Even if we want higher, pullbacks are healthy. Okay, pullbacks are very healthy. 4 hour, won't look at that much right now. 1 hour chart. The 1 hour chart is going to get played with likely tomorrow morning if I'm on. And what I'll be marking out on the 1 hour chart are any lows that get put in here. I could actually probably mark out this low. Need my little magnet here. So we've got some sell side that's below today's low. We'll mark the on session high, the on session low, and we'll look to see how those ranges play out. Dropping down any lower than an hourly chart on my plans for the next day seems useless. If I drop down to like a 15-minute chart, okay, great. I can establish like a little range. I got lows here. I got highs here. We look for manipulation sweeps and possible trades. It's all going to change by the time the morning comes. The market doesn't open for another 12.5 hours, right? So I would break down your nightly routine to, on Sundays, look at the weekly. or look at the weekly every day if you want. Daily, maybe 4 hour and 1 hour. Stop at the 1 hour. Just give yourself a broad enough idea of what you want to see going into the next day. And we already know what we want to see is we want to see this weekly area, this weekly order block here, see if that can get tested and what we do from there. Do we just drive through it like it's not even there? Do we set up a trade with possibly relatively equal lows in this area where we can sweep and target this area? This is going to be the area of interest for tomorrow and possibly any fair value gaps that line up or stay alive in this area overnight. That's really all I got for the session. I'm going to kill this recording and then we can have a little chat.